Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohart University of Science and Technology. Title of this course is Principle of Accounting, and the course code for this subject is BS 161. This is our lecture number 18, and the topic for today's discussion is accounting cycle, under which specifically we will deal with journal and will discuss a numerical case elaborating this topic in detail. Basically, accounting cycle consists of a series of steps which will require the number of subsequent lectures to complete this accounting cycle in full. We are in the first phase to discuss another example that will explain the first step of accounting cycle, named as journal. The outline of this lecture consists of the discussion related with accounting cycle, what we have started from lecture number 17. We have to understand the debit and credit rules in detail, which is our second agenda of this lecture. This is really important and crucial for the accounting students to know about debit and credit rules in detail, because 95% of the accounting will based on these debit and credit rules. Finally, we'll take a numerical case to explain the proper and formal method of recording the economic transaction in the journal format. Here it is, a complete snapshot of the accounting cycle, which requires a series of steps to follow to complete it for a specific time period. Usually the accounting cycle starts with certain economic transaction, after which we have to journalize that transaction. This is our first step, starting from the left side, where a cartoon is holding a pencil to journalize or record the economic transaction. Here I would like to narrate the accounting definition first, which will explain these number of 7 and 8 steps. As we have studied in the physical classes, that accounting is an art of recording something. So the first section of the accounting definition states the art of recording. The first step of accounting cycle is to journalize or to record the economic transaction in a proper format in a manual or register. Nowadays it's software based, named as journal. After that, recording those economic transaction in the chronological record in the journal, then we have to post those entries into the ledger accounts. And the definition of accounting continues like it's an art of recording. And the second section states that, and then classifying the transactions. The journal basically consists of all the economic transaction and activities which are recorded in a chronological order. From this journal, we have to select or pick up the relevant similar nature transaction in order to make the proper ledger accounts, which will elaborate the similar nature transaction in one place. So after making all the ledgers, like cash ledgers should be separated, account receivable ledgers may also be separated, and then liabilities ledgers and as well as the owner equity ledger will be separated from this journal, which consists of all the activities or economic transaction recorded in the chronological order. After making all these ledger accounts, we have to make a trial balance in the third step in order to know that either we had made certain mistake or done our job correctly. This trial balance will let us know if there is certain adjustments are required in the fourth steps. If there is no error, we can directly move or transform this trial balance into our adjusted or final trial balance. If there is certain mistakes, so we are certain entities or certain entries rather, I must say, were previously omitted to be recorded in journal due to any reason, then those year-end adjustments are required to be done in the journal, which needs to be incorporated in this third step trial balance. And after incorporating those adjustments into the trial balance, we move towards our final adjusted trial balance. Now we are on fifth step, where we have our adjusted trial balance. From this adjusted trial balance, our final destination will be achieved to make the financial statements, which are balance sheet, income statement, statement of cash flows, statement of owner equity, and as well as statement of retained earning. After making or achieving our final destination, we have to close down the nominal accounts or temporary accounts which are relevant to one accounting period or accounting cycle. Those consist of the closure of revenue, the expenses account, the income summary account, and as well as the drawing account, which I'll discuss in chapter number 4 in detail. So after closing these entries, which are nominal accounts, we are left with the remaining balances in the trial balance, adjusted trial balance, which are named as the real accounts, which are normally not closed down by the accountant at the end of accounting period. So therefore, after closing the four basic nominal accounts, we will make after closing trial balance, and here our accounting cycle will complete. Dear student, we are in our first step to journalize the transaction. So therefore, the discussion will consist of the importance of debit and credit rules and how to journalize these entries in a journal format. Let us discuss the debit and credit rules in detail. The debit and credit effects account as follows. We know that we have an accounting equation which equals to assets are equal to liability plus owner equity. All the accounting record the economic transaction on the basis of 5 main head of accounts, which are assets, liability, equity, and then let me move forward, revenue and expenses account. As we are following the double entry accounting system, so every debit entry will have a similar amount of credit entry in either a T account or in journal, which I'll discuss in a few minutes. So basically we have 5 main head of account that covers normally 95% of economic entries or transactions. So either we have to record the debit and credit entry into a T format shape, like if I am starting from the left side to discuss the assets, and we know the gap principle in detail in our classroom discussion, where I have discussed the business entity principle, according to which every business has its own legal separate entity. So we have to discuss our debit and credit from the perspective of that legal entity, that may be a corporation or a company form of organization. So we are assuming that we are going to discuss all these debit and credit rules from the perspective of the company form of business organization, which is normally a legal form of business entity. So if the company's assets are increasing because of any economic transaction, so when there is an increase in the number of assets of the company, we have to record that entry as debit. Like for example, if the owner has invested certain amounts of dollars into the company, so the cash level of the company, and we know that cash is our asset, so therefore the cash will be recorded at the left hand side of a T account. So we have to mention our date first and then to mention the amount owner has invested into the business. Now let me conclude. When there is an increase in the assets of the company, let me explain with the help of arrow. When there is an increase in the assets of the company, it will be recorded as debit entry. And when there is decrease in the assets, like the owner has withdrawn the money from the business, so cash level of the business will decrease. Therefore, the cash ledger will decrease with a credit entry. The rules for liability and owner equity is totally inverse of the assets. So when there is a decrease in the liabilities, it will be recorded as a debit entry. And when there is increase in the liability, it will be recorded at the right side of this T account, and it will be a credit entry. Similar rule is for owner's equity. When there will be decrease in the owner equity, we have to record it a debit entry in the T account. And when there is increase in the owner's equity, we have to record that specific event in the credit side of owner equity under T account. Here we have the final rules for our revenue and expenses. So when there is, let me start from revenue. When there is increase in the revenue of the company, we have to record the amount at the right hand side of our T account with the credit balance. And when there is a decrease in our revenue account, it will be recorded as a debit entry. For expenses, the rule is inverse. When there is increase in the expenses of the company, so it will be recorded as a debit entry at the left hand side of the T account. And when there is decrease in the expenses of the company, we have to record that transaction or that expense at the right hand side of our T account with the credit entry. The difference of revenue and expenses normally gives us the net income. When this revenue is greater than expenses, so our net income will increase. And when there is increase in our net income, it is recorded as credit entry. And when there is decrease in our net income, it will be recorded as a debit entry. When the expenses are greater than the revenue amount, the resultant value will not be the net income, rather it will be net loss. So the loss entry will have a debit entry in the net income ledger at the left hand side of this T account. Let me conclude all these debit and credit rules with my self-made diamond rule structure that will assist you to memorize all these debit and credit rules in one snapshot. Here it is, my self-made diamond shaped rule, which will assist you to memorize all the debit and credit rules in a minute. Basically, we have the 5 main head of accounts that consist of, I'm starting from left hand side. We have assets like cash, account receivable, note receivable, land, building, equipment. We got liabilities, economic events like account payable, notes payable, salaries payable. We have our owner's equity section like stockholders equity section, capital stock, or if the business is owned by a single individual, then that person's name is mentioned before that owner equity. Similarly, we have our revenue section when we are going to sell out our product to the customer. And then finally, the 5th main head of account is our expenses. The expenses consist of like cost of goods sold. the utility expense, the marketing expense, the selling expense, telephonic expense, so on and so forth. So our major accounting economic transaction covers these 5 main head of accounts. What you need to do is to understand the economic event and transaction. And as we are following double entry accounting system, so therefore you have to figure out the debit entry and credit entry that is going to happen in that particular economic event. One particular head of account will be increasing and the other one might be decreasing. So what the debit and credit rules states about these 5 main head of accounts. So we have to categorize those particular ledgers into either assets, liability, owner equity, revenue, or expenses. And then the second step will be to find out either that particular head of account is increasing or decreasing. So let me complete these rules that will assist you to understand the debit and credit rules. Dear students, as mentioned at the side borders, assets and expenses are mentioned in the dark brown color. So the arrowhead upward is showing us the increase in the total amounts of assets or expenses. So when you have to memorize only this single step, that when there is an increase in the assets as mentioned with the arrowhead upward, when there is increase in asset or any expense of the company, you have to record it as a debit entry. And when there is a decrease in either assets, like there is decrease in cash because you are going to pay out your utility expense. So when there is decrease in asset, like there is decrease in cash, you have to record that cash amount into the credit entry. Similarly, when there is decrease in the asset amount, once again we have to record it as credit entry. So this is our starting point. Let me explain you once again. When there is increase in asset and expenses, it will be recorded as a debit entry. And when there is decrease in assets or expenses, it will be recorded as credit entry. The rule for the rest of the middle main head of accounts like liability, owner's equity, and revenue is totally inverse to what we have discussed for assets and expenses. Here it is, when the arrowhead upward is showing that there is increase in liability, when there is increase in owner equity, or when there is increase in revenue in any particular economic event, you have to record it as credit entry. And when there is decrease in either liabilities, owner equity, or in the revenue of the company, you have to record that particular event or transaction in a debit column with the debit entry. So here it is, our diamond shape debit and credit rules snapshot to understand all the rules related with main head of accounts. So the leftover task for the student will be to analyze the transaction carefully and find out the 2 main accounts. One might be debiting, another one will be having a credit entry. So you have to figure out which account is need to give a debit entry and which account needs to give a credit entry. Here we have let us discuss now the formal method of recording the debit and credit entries in the formal journal pattern. This is the pattern what we have to adopt while recording the economic transaction in the chronological record in a business entity. So first of all, we have to mention at the top of this journal as a journal. Then it consists of 4 main columns. We are starting from the left hand side. We have to mention a date column. It will refer towards a particular transaction on a specific date. The middle one starts with account titles and explanation. we have to mention the relevant accounts that are going to debit and credit. Along with that, just beneath that entry, we have to give a short narration that will explain what is actually happening or what has actually happened in this event. The third column is for debit entry. DR represents the debit record, and the dollar sign is letting us follow the monetary principle. And the rightmost column refers towards the credit record or credit entries. So dear student, we have to mention date first, then to mention the account title, which is going to have a debit entry because the debit column is first, then the credit one. Therefore, the rule is to record the debit entry first and then the credit entry. We'll see a couple of economic transactions and how to journalize them shortly. Let's continue our previous example to journalize these transactions in the formal method of journal. The transaction states that on May 1st, Jill John and her family invested $8,000 in the JJ's lawn care service and received 800 shares of stock. Now, after analyzing this transaction, we came across that Jill John invested $8,000 into the business organization. So as we know that this $8,000 is cash, and the cash level with JJ Lawn Care Service will increase. Look at the bottom of this transaction. We got our diamond rule for recording debit and credit entries. We have to categorize our cash level first. The cash level with the company has increased. As we know that cash is our asset, and when there is increase in the asset, we have to give a debit entry. And at the other side, we have to figure out that the company's capital stock has been increased because the company has issued 800 more shares of stock to Jill Jones and her family because of her investment. Therefore, the owner equity, which is just in the middle of this diamond rule, the owner equity has also increased because the company has issued 800 shares of stock in excess to its previous issuance. So when there is increase in the owner equity, the rule states that we have to give a credit entry. So now we are in a position to record this economic transaction in a formal method of journal by making a diagram similar to the specimen I have discussed, for instance, before. The left column is for date. The middle one is for account titles and explanation. The third column is for debit entry, and the last column is for credit entry. As this transaction is for May 1st, so therefore we have to mention the same date, May 1st. And as we have analyzed the transaction that the cash level with the company has increased, so therefore we have given cash level has increased, so therefore we have given a debit entry first because cash has been debited, and the capital stock has also increased, so therefore we have given a credit entry for capital stock because when there is increase in the owner's equity, we have to record it with a credit entry. So therefore we have mentioned in our credit column. One thing you need to be careful about is to give a slight indentation for the credit entry so that we should be clear by looking with a naked eye that cash is our debit entry and capital stock is our credit entry before looking into the right hand side of this table. This indentation will bifurcate the debit title from the credit title. At the end, the final rule is to give a short narration which is referring towards the explanation for this entry, which needs to be closed down in the brackets. and it is stating it must be a short and a precise statement which is explaining that owner invested cash into the business. Let's discuss the next transaction, which is my second. JJ purchased a lawn or a riding lawn mower for 2,500 cash. The first step is to analyze the transaction. JJ has purchased a lawn mower, and lawn mower is named as tools and equipment, and there is increase in the tools and equipment. So we know that tools and equipment comes under the umbrella of assets. So when there is increase in asset, it will be recorded as debit. So we have to record a debit entry for tools and equipment. And since the company has paid cash amount for this purchase, so therefore the level of cash will decrease. We know that cash is also our assets, and this asset has been decreased. So therefore we have to give credit entry for cash and debit entry for tools and equipment. Let's see how to do that in journal. Here it is. After analyzing the transaction, it's my 2. We have plugged the date into the relevant column first. And as we have analyzed that, the level of tools and equipment has increased in the company. So therefore, we have mentioned it in the debit column, because when there is increase in a particular asset, it will be recorded as debit. And at this very same time, as we have paid the cash for this purchase, so therefore another asset is going to decrease. Therefore, this cash account is going to decrease. This is why we have mentioned it into the credit column. And as we know that the double entry accounting system state that every transaction that is having a debit entry will definitely have a credit entry. Once again, this indentation is clearly bifurcating that tools and equipment is a debit entry, and this indentation is referring that this cash is going to have a credit entry. The last step is to give a short narration, which should be covered into 2 small brackets. JJ purchased lawn mower and paid cash. So this short narration is referring towards what actually has happened in the above transaction, this one. Let us analyze another transaction of my 8. JJ purchased $15,000 worth truck. So truck will increase, and we know that this is our asset. So the truck title will increase with a debit entry. And then the statement said that JJ paid $2,000 down payment. Definitely the payment is normally in the form of cash. So another asset, which is cash, is going to have a credit entry with how much dollar? $2,000. And then the company subsequently issued notes payable for the remaining amount. Therefore, the liability of the company, which is notes payable, will increase. And the rules for liability states that when there is increase in the liability, it must be a credit entry. So truck increases with 15,000 as a debit entry. Cash decreases with a 2,000 credit entry. And then the third title or account notes payable is going to have a credit entry, because the rule states that the company liability has been increased. So therefore we have to give a credit entry for this. Here it is in a formal journal format. We are following it to write the journal first, and then to mention the date column, accounts titles and explanation column. Third one, debit record column, and then the credit record column. After analyzing the transaction, we know that we have to mention our relevant date, which is May 8. We have done it nicely. Truck has been increased with the amount of $15,000, which was a debit entry, so we have done correctly. The cash level was decreased, and when there is decrease in the assets, as mentioned in the diamond rules just glowing beneath this transaction, we have to give a credit entry. So we have done the same for cash account. And then finally, the notes payable is going to have a credit entry because the rule states as glowing just beneath this entry that when there is increase in the liability, it should be recorded as a credit entry. We've done the same correctly. The final step is to give a short narration that what actually has happened in the above transaction. The narration states that JJ purchased truck, partly paid cash, like half of the payment has been paid out, which is 2,000, and then signed a note payable for the remaining amount with that party. Let us analyze another transaction of May 11 when the JJ has purchased some repair parts for $3,300 on account, and on account means that company has not paid out in the form of cash, rather these are on open account payable. So once again, the tools and equipment has increased with $300 as a debit entry, and account payable, which is once again our liability, and there is an increase in the liability, so therefore we have to give a credit entry. Here it is. I'm not gonna waste my time on titles and this explanation, as I have already done the explanation for these first two lines. We have to mention the date correctly in the date column, which is May 11. We have done it nicely. And after analyzing the transaction, we knew that the repair parts consist of in the tools and equipment title, and tools and equipment comes under the umbrella of assets. So when there is increase in the asset level, it should be recorded as a debit entry. Therefore, we have done it correctly. And then the company's another liability has been increased. The arrowhead is upward because the company has not paid out this $300 on this specific date. Rather, these are on open account. Therefore, the liability of the company, which is named as account payable, has increased. An account payable comes under the umbrella of liabilities, and when there is increase in the liability, it should be recorded as a credit entry. We can see that we got $300 into the credit column for the account title named as account payable. Let's look at the final narration, which states that JJ purchased repair parts on open account. Let's analyze the last transaction of this lecture, which is saying that May 18, JJ has sold out half of the repair parts to ABC Lawn Mower for $150 at a price equal to the JJ's cost. So therefore, the tools and equipment is going to decrease in the possession of JJ Lawn Mower because they have sold out, and we know that tools and equipment comes in the under the umbrella of assets. So therefore, we have to give a credit entry for $150 since there is decrease in tools and equipment. And then the ABC Lawn Mower, this statement states that the ABC Lawn Movers agrees to pay out the JJs within 30 days. The ABC Lawn Mower did not pay on the spot. Therefore, we have to construct or make an account for ABC Lawn Mower with the title of account receivable. And as we know, account receivable comes under the umbrella of assets. So this asset has been increased because we have to collect this amount later on from ABC Lawn within 30 days. Therefore, we have to give $150 of debit entry for the title account receivable. Here it is. We are going to mention the correct date, which is May 18, as mentioned over here. The account receivable of the company, which is for JJ Lawn Mower, has increased with $150, and tools and equipment has decreased, which is another asset. And the rule is just glowing beneath this transaction, which is a diamond rule for debit and credit, that another asset has decreased, which needs to be given a credit entry. Therefore, tools and equipment with the title has a credit entry into the credit column. And finally, the narration states that JJ sold some of the repair parts to ABC Lawn Mover to be collected within 30 days. Some of the repair parts on original cost. It means that the amount at which the JJ has purchased, they have charged the same amount from ABC Lawn Mover. So this is the way how you are going to record the economic transaction in a formal journal format. Let me give you a complete snapshot of all transaction what we have done. So this is our final snapshot of journal. At the top we have to mention the journal because this is a chronological record of all the economic transactions. So therefore we have to mention our entry with particular period of occurrence, like my first come first, then my second. Similarly, subsequently we got my 8 and then later on up to my 18. So we have to record all the economic transaction in the pattern and in the look what is available in front of you, just in front of you. Dear student, this is a complete snapshot of journal. We need not to record every transaction individually. Rather, because of the space issue in our previous slides, we have to mention each transaction separately to let you understand the recording of economic transaction correctly. After recording each transaction, we have to give a single line to bifurcate the first transaction from the second one. However, if you are expert enough to record the transaction nicely, correctly, and in a straight fashion, so the single line may also be omitted in journal. First entry of my first, my 2, my 3, and up to until your transactions end, and then you have to give a double line so that it will mention that the question and or here. This was all about how to record your economic events or transaction in the journal. Thank you very much for listening to this lecture. If you have any question or confusion, you can ask either on KCMS or another way around. You can also email me with your queries on my official email address. Good luck for the day. Allah Hafiz.